Hey guys, what's going on? I had a request by a commenter to take a look at Near Protocol. Ticker for this is NEAR, and I'm currently on the weekly time frame. This one seems to be holding up pretty well. We're still in this pattern here, so we have this lower region of support with multiple touches on it, 3 touches on it here, or actually more than that, about 4. And we have this down-sloping diagonal resistance line. And yeah, we're just still within this pattern. We're coming to the apex point quite soon. Let's see if I just extend this out. Yeah, this pattern is going to come to its apex point in late October, around October 30th. And then at that point, it's going to have to pick a direction. This is more likely to break to the upside for a few reasons. Okay, firstly, if I take a Fibonacci retracement tool, run it from the swing low all the way up to the top here, you'll see that where we are right now, we're sitting on the support, the 786 support level. So this already is quite a deep retracement. I would like to see this level hold. And it seems as though the market makers want this level to hold as well, because you see the price would come below it. But by the time these weekly candles close, buyers step in. And yeah, they're defending these candles. The bodies continue to close above this 786 level, which is around about $1.15. If the price closes below the 786, well, then that's going to become a resistance. It's not ideal. But we do have this lower support line as well that's slightly below it. Now, another reason why I would assume that this will ultimately break to the upside, in addition to this deep retracement down to the 786 holding support, is that we're showing bullish divergences. So as you see on the price action here, I'll get rid of the Fibonacci right now so you can see better. We have a low, then we have a lower low, then we have a lower low in addition to that. But if I open the oscillator here, look at the RSI. So, sorry, this is just called a divergence indicator, but we have a low, then we have a higher low, then a higher low in addition to that. So yeah, this is basically 3 points of bullish divergence on the weekly time frame, coming to the apex at the 786 retracement level. And because of all that, I'm expecting it to break to the upside. But I mean, you never know, there's no guarantees, but adding it all up, the likelihood is higher for an upside break. But until then, for the next month or two, it's just going to be a narrow trading range. I mean, the lower end of this range is currently around $1.11, and then the upper region of this range is about $1.42. It's still tradable. Like if you go down to a smaller time frame here, I'll change the chart. Here, now I'm on the 1 hour chart, and I have the previous day high and the previous day low marked. You can trade it on the smaller time frames and it'll still be worthwhile. So for example, right now, seeing as we're in the middle of this range, I wouldn't personally look to take a trade, but you know, if we come all the way back down here to the previous day low, a potential trade opportunity may be to look for a long and place a stop loss just below it, and then target the, I would probably target the mid-range right here on a long from down here. So for example, let's see what that would look like. So say we're able to enter along here, we place a stop loss below the previous day low and below this wick, and then we target pretty much around where we are right now. I mean, that's a potential trade setup giving you a risk-reward ratio of 1 to 4.25. You'd risk 0.69% to potentially get 2.92% to the upside. So that's an option. Or alternatively, you know, if the price comes back up here to the top, you can just do the same thing, enter a short, and then target the mid-range. So that's what I'm seeing on a shorter time frame. But yeah, overall on the higher time frame, this actually looks pretty good. The trading range is narrowing, but we are showing strong bullish divergences on a high time frame, which is great. If you wanted to play this conservatively, just keep an eye on it and wait until you see weekly candles closing above this diagonal level of resistance to enter your long positions, right? That way you don't have to just anticipate and guess that the price is going to break up, wait for confirmation, and then enter. And if the price on near does break out of this diagonal level of resistance and starts closing weekly candles above it, I'll make new videos that will show you the potential levels of resistance on the way up. All right, guys, hopefully that helps. If you're not subscribed and you want to get notified when I release these videos, click subscribe, click the bell, click on all. If you don't do that and you click away, you might have a hard time finding the channel again because it's new. It's only around 1,000 subscribers. And because of that, I'm not really prioritizing the search algorithm. Also, if you want to trade near and pretty much all the other coins that I discuss on this channel, I'll put a link to the exchange that I personally use in both the pinned comment and the description. I really like it. I like the interface. I like the features it offers for traders, but also most importantly, they don't require you to submit your KYC information, so you don't have to send them any of your personal documents. All right, guys, hopefully that helps. Take care. Have a good day. Bye.